Hello everyone, so my name is Putrinda Kartikadhewi and my last NPM is 033. So today in this presentation I would present about forensic accounting. So before we go any further, we must understand what is forensic accounting, when is it needed, and why does it matter. So forensic accounting is the application of accounting, auditing, and investigative skills to examine financial evidence and uncover fraud. In simple words, forensic accounting are like financial detective. They investigate the financial record to discover whether fraud, corruption, or financial crimes have occurred. And when forensic accounting is needed. So, forensic accounting is needed when organizations face suspect fraud, financial disputes, bankruptcy, money laundering, or legal investigation. Instead of only checking whether financial statements are accurate, forensic accountants search for evidence that can be used in court. And why forensic accounting is matter? So, forensic accounting are matter because it protects organizations from financial losses by detecting fraud, preserving reliable evidence, and supporting fair legal decisions. As a result, forensic accounting supports fair decision and increases public trust in financial reporting. And the second part is differences between forensic accounting and auditing. Although both of them are professions examine financial information, they have different objectives. The main objective of auditing is they are ensure financial statements are fairly presented. Meanwhile, forensic accounting, they investigate fraud and provide legal evidence. And auditing, they focuses on accuracy and reliability of financial statement. Meanwhile, forensic accounting, they focuses on fraud, financial losses, and litigation. Another differences of auditing and forensic accounting is auditors usually perform sampling and compliance testing because they do not examine every transaction. Meanwhile, forensic accounting, they detailed investigation, reviewing documents, contracts, bank records, emails, and other evidence until they find the truth. And for the last, the output is also different. Auditor produces an audit opinion, while forensic accounting produces an investigation report that may be used as legal evidence in court. And now I will explain the main type of forensic accounting. So the first step is fraud investigations. This involves investigating financial fraud such as embezzlement, I don't know how to say this, and corruption, bribery, asset misappropriation, or financial statement manipulation. And the second type is litigation support. In this role, forensic accountants help lawyers and judges by providing financial analysis and expert opinion during legal proceeding. And for the fourth part is bankruptcy and insolvency investigations. They examine financial records to determine the cases of bankruptcy and identify whether any fraudulent activities occurred before the company became insolvent. And the final type is money laundering investigations. Forensic accountants trace illegal financial transactions to identify how criminals hide or transfer money obtained from legal activities. And finally, let's look at a real case of forensic accounting. So, in 2019 financial statement, Garuda Indonesia reported a net profit. However, this profit was questioned by a regulator and shareholder because the company recognized revenue from cooperation agreement with PT Mahata Aero Technology before actually receiving the payment. And according to accounting standards, this revenue should not have been recognized at that time because the requirement for revenue recognition had not been fully met. And in this case, forensic accounting played an important role. Um, Investigator reviewing accounting records and contract, journal entries, and supporting documents to determine whether the company's revenue recognitions complied with accounting standard. The investigation concluded that the revenues should not have been recognized in 2018. As a result, the company's profit was overstated. Garuda Indonesia was required to restate its financial data, receive sanction from the regulator, and experience a decline in public trust. This case shows why forensic accounting is essential for maintaining transparency, accountability, and public confidence in financial reporting. And that's all from my presentations. Have a great day, everyone.